Morning to you all, Keith at Crypto Bullseye. So this one's going to be an update on Algorand. We're going to be going through Algorand because it's had a bit of a tough time lately. We had the bump, we had the run. It's pulled back into its long accumulative range. So how can you take advantage of the next Algorand trade? Is it a good time to accumulate? Let's dive in. Right, okay, Algo army. I know there's a big army out there for Algo. I am going to split you into three groups today. The groups are going to be the people that have holding Algorand for the last few years, the people that have been holding Algorand for the last few months, and the people that are looking to get into Algorand. Guys, they say holding crypto for a long period of time gives you an advantage. People that are looking to buy into Algorand now have got a better advantage than all of us. So what we're going to talk about first, guys, is diminishing returns. We're going to talk about the red herring that is all-time highs. Is this thing going to put in an all-time high? I very much doubt it. How do you prepare for this, guys? Firstly, you look in 2019, and you can see in 2019, we put in this high here. And then we look at the 2021 bull run, and you can notice one thing, diminishing returns. We've put in a lower high. So we've put in a lower high. You can expect that this wedge is going to hold. You can plan, you can prepare for this wedge to hold. How far is it to the top of the wedge? 1,143%. So you've got 1,143% to the upside, guys. Now, everybody talks about new all-time highs. Is your crypto going to go through a new all-time high? Now, I want to ask you this question. Does it actually bloody matter? How can you get a higher probability move without something going to an all-time high? And I'm using Algorand as an example, guys. It doesn't necessarily mean it's going to do it, but just look at this. From its previous bull market high, not its all-time high, from its previous bull market high, I'm going to get a Fibonacci retracement, and I'm going to put it there, and I'm going to take it all the way down to 8 cents, which was the bear market low. Now, I want to look for key levels on here. The first key level is going to be the 38.2%. This is what I mean, guys. All-time highs are red herrings. So from where price is now to the 38.2%, that's a 5x, guys, 516%. So you've got Solana. I'm not dissing Solana. I love Solana. You've got AVAX. You've got all of these top layer ones, guys. Things that are putting in new all-time highs, and you're looking at the market cap of them, and you're thinking, right, okay, I could get another 2x out of this. I can get another 3x out of this. Guys, a 38.2% retracement from its previous all-time high, when you get a 5x to a 38.2% retracement, that's a higher probability than what it is getting a 3, a 4x, a 5x of something that's going through a new all-time high. So think outside the box. Should you put all your eggs in one basket? Definitely not, guys. You don't know what these things are going to do, but this is how you can prepare for it. That would be my first area for taking profits. You do have a resistance point before that. This resistance point is this lower high here. So that is going to act as resistance. And let me just check, see if the Lux Algo pops resistance on there. No, this is going to act as a resistance level, guys. There's no mention in it. Now, one thing that is bothering me is we bring up the moving averages and we talk about the traffic light system. Anybody that's new to the channel, what is the traffic light system? This is the traffic light system. You've got a 200 period moving average. That's your green moving average. You've got a 50 period moving average. That's your yellow moving average. And you've got a red, which is your 20 moving average. Now, what happens, guys, when you get a crossover of these three moving averages, you get a big surge to the upside. That's bullish. When the green's on the bottom, the yellow's in the middle, and the red's on the top, i.e. 200, 50, 20, that is bullish. Now you can see here, guys, we've got the reverse here. So we've got some resistance to get past. And this is the 200, the 50, and the 20 moving average. So that's what we need to do in the short term. So for bullish news, have we put in a bottom, guys? Because there's a couple of bullish signals here for Algorand. And I want to talk to you from, firstly, the guys that have been holding it long term. What are you doing? Are you looking to average down your position? How are you playing it, guys? Secondly, the guys that have been holding it for months. You're no doubt down, guys. You're no doubt down. So you can see we've had a bit of a break here. You see we've had a bit of a break from the diagonal. What does this allow for? What does this break allow for, guys? We talk about risk management all the time. And this is just an example from a trading perspective. We can get our take profits and we can get our stop loss signals on there. If you're looking at take profits and you're going for the previous swing high and then you're looking to protect yourself below the low, that's a 5.35 risk to reward. What happens if you're wrong? You're wrong, the least amount of capital at risk possible. So you look after the risk and the reward will look after itself, guys. I'll say it time and time again. If we had a break up here, still looks good. However, you take it on the close. What does that do to your risk to reward? Make sure that you get that good entry. Make sure you get that greedy entry. Make sure that you get that entry on a rebound or a small break, guys. As long as you've got a little bit of wiggle room to protect yourself, then you're all right. Next thing that I want to show you is, this is the next bit of bullish news. Next bit of bullish, next bit of bullish technical, should I say, is the RSI. We talk about the RSI all the time, guys. I love the RSI and I love divergences. This is telling us a story, and it's telling us a different story to what the chart's telling us. We've put in a higher low there, and what's happened on the chart, guys? Lower low. We've come back down. We've put in a lower low. So we've broken trend. We've held trend. We've got a bullish divergence. This is looking strong, and this is like it's a potential local low. Because when you look left, guys, clues look left. You can see this is a big support base. You can see how this line acted here. Let's add it in. You can see how this line acted here as support, support, resistance, resistance, support, support, resistance, resistance. So that's holding, and that's exactly where we bounce from here. And that's indicating that that's a good level. So from an investment perspective, guys, if you're talking small amounts, that looks good to me. If I was going to add $50 in here, I'd be quite happy if I had $50 in here. I'd put a limit order down here at 8 cents in case it dropped. If it did drop, then that would be $100, and my average would be in the middle, guys. We know that the risk to reward's good on this thing, so that's what I wanted to show you guys. Anybody that has been absolutely battered on Algorand, if you aren't overinvested, guys, this is the key. If you've got 75% of your portfolio in Algorand, does it make sense to average down? No, that's a stupid idea. If you've got 1-2% of your portfolio in Algorand and you're in a loss, does it make sense to average down now? For me, it completely makes sense to average down now. If I was new to Algorand, does it make sense getting in Algorand now? I've shown you bullish divergence. I've shown you that's where you're wrong. And I've shown you how you protect yourself by adding another level at the bear market low to bring your average down within a diversified portfolio. So the next thing that we're going to talk about, guys, is have you protected your crypto? Serious question, guys. Have you protected your crypto? Because the Tangem wallet is one of the easiest things that you can actually use to protect your cryptocurrency. And they've got an offer on here, guys. If you just flip through, go into tangem.com, make sure that you buy these things direct from manufacturer. That's the key point. Don't buy them from eBay. Don't buy them from Amazon. Buy them direct from the manufacturer at all times, guys. Be safe. It's all about being safe in crypto. Make sure that you know where you're getting them from. So you go on the Tangent website, and if you see this down here, you can scroll down. You've got different collections. You can see the 3-card set here, $69.90. If you scroll down to the winter collection, guys, you've got a 3-card set there at $59.40. Then if you add my discount, bullseye discount code, you'll get an extra 10% off that. So that's 25% off in all. Promo code, guys, is within the link, within the description, within the link below. Get my words out. So make sure that you protect your crypto. Tangem's a good option. Right, I'm going to be doing loads of videos today, guys. I'm going to try and do a bit of a marathon for you, and I will see you in the next one.